Hello everyone, welcome to our channel. Today we will learn some basic accounting terms. To understand some very basic accounting terms, we will take help of a very famous TV serial, Tarak Mehta Ka Ulta Chashma. I am sure maximum of you must have watched it. As we all know, Jethalal owns a very famous electronics store, Gada Electronics. Let's understand some terms with the help of his shop. Now, as we know, the first step of starting a business is investment of money into it. So when Jethalal would have invested his money into Gada Electronic, that money is known as capital. Over here, Gada Electronics is an entity and Jethalal is a proprietor or owner. Hence, when any money is invested by owner into his business, it is known as capital. After investing his money, Jethalal found that his money is not enough to start business. Hence he approached a bank. Let's assume that he approaches ICICI Bank for extra money. And bank agrees to pay him extra money for his business with the agreement that the bank will get its money returned by 3 years. Now money with which Jethalal borrowed over here, which Jethalal will start his business, is known as loan, and this is a quite common term nowadays. Since loan would be repaid after 1 year, hence in accounting term it is known as non-current liability. Liability, as the word suggests, is anything which we owe to another. Over here, Gada Electronic owes this money to ICICI Bank. Hence it is a liability, and since this liability will continue for more than 1 year, it is called non-current liability. Now after having sufficient money, Jethalal also needs to purchase some electronic items which he would sell in his shop. So he approaches, let's assume LG company, and he bought 2 TV set with the term to pay for the same after 2 months. Over here, another liability is generated for Gada Electronics. But since this liability is only for 2 months, it is called current liability. Now after these first 3 transactions, you already know the 3 accounting terms. First is capital, that is money invested by owner into his business. Next is non-current liability, that is obligation which business owes for more than 1 year. And current liability, that is obligation which business owes for less than 1 year. Over here, one point is to be noted that segregation of liability into current and non-current is done on year basis. However, to be more precise, segregation is done on the basis of accounting period. In general term, accounting period is of 12 months, that is from April to March. But however, it can be more than 12 months also as per the business need. Now coming back to Gada Electronics, now it would also require some furniture such as table, chair, shelves on which the TV sets would be kept. So Jethalal approaches IKEA store. Now over here he had to purchase the furniture without credit, and all the payment was paid on cash basis, that is immediately. Now the store is ready. Jethalal has invested his money, borrowed some additional fund also from the bank in the form of loan, struck a deal with LG to purchase 2 TV sets for 2 months credit term, and also purchased a furniture for his store. So over here we learned about capital, entity, that is Gada Electronics, non-current liability, current liability, owner and proprietor. After purchasing furniture, TV set, 2 set of assets are generated at Gada Electronics. Furniture, which will be referred as non-current asset, and the reason is that it would be used in business for more than 1 year and it would help in conducting of business. So the expense which is incurred in generation of non-current asset is known as capital expense, that is the money which Jethalal spent on buying those furniture, that is known as capital expense. And the TV set is referred to as current asset. Also, Since this asset would be resold for generation of profit, this is also referred as stock. That means any asset which is procured for the purpose of resale is known as stock, irrespective of the value. Expense incurred to acquire stock is purchase. Also, there are various expenses which are incurred while conducting business, and one of the most common expense is electricity expense. Over here, Gora Electronics, they also have to pay electricity bill. Let's assume the amount to be 500 rupees, and the expense made for these type of service or item is known as revenue expense. In other words, any expense other than capital and purchase is known as revenue expense. Also, if you remember, Gora Electronics have to pay LG for TV purchase. Over here, LG is a creditor in accounting term. So we've understood what is non-current asset, that is item purchased for use in business and whose period of usage is more than 1 year. Next is current asset, that is an item purchased to be resold in business, that is the TV sets. Capital expense, expense incurred to purchase non-current asset. Purchase, expense incurred to purchase item which is to be resold in business. And revenue, it is an expense other than capital and purchase. Next, what happens is that suddenly Tappu comes to Gora Electronics. We know that Tappu is Jethalal's son. And he asks Jethalal to submit his school fees. And suddenly Jethalal realized that he has put all his money in Gora Electronics. So no spare money is left. Therefore, he takes out some part of capital and gives it to Tappu. Now, since this expense has nothing to do with business, it is known as drawings. And then what happens after Tappu leaves? Mr. Hathi, a resident of Gokuldham Society and Jethalal's neighbor, he enters the shop and he really needs to buy a television. Jethalal offers him television, and since Mr. Hathi is a good friend, he also agrees to take money from Hathi after 1 month. Over here, two terms are triggered. First, sale of TV is known as revenue. In short, dispatch of stock or cash flow generated by dispatching stock is known as sale. Also, since Mr. Hathi is not paying, his account will be recorded in books under the head of debtors. In another word, debtor is also current asset from whom money is receivable by business. So over here, we've learnt about the following terms. First is drawing, that is expense incurred by owner or proprietor for personal use. Next is sale, that is cash flow generated by dispatching stock. And the last is debtor, those assets which will result in conversion of cash in future. Now coming to the last slide, accounting period has come to an end and Jethalal really wants to know whether he has made a profit or loss. Now suppose Jethalal sells TV for rupees 12,000 and he has one set of TV which he purchased at rupees 10,000 each. First step he will do is he will compute gross profit or trading profit. The formula is opening stock plus purchase minus closing stock, and this will become the cost of goods sold, and value is subtracted by revenue. Over here you can see that he earns 2,000 as gross profit, and in order to compute net profit we will subtract 500 rupees. The 500 rupees was the electricity bill, and finally 1,500 is the amount which he can take home. Over here, after this slide, we know about capital, that is the money invested by owner. We know that liability, and it is segregated into two, that is current liability which has to be paid within 12 months, non-current liability which has to be paid after 12 months. Asset, which is further categorized into two parts, current asset, purchased to obtain benefit within 12 months, and non-current asset, Purchase to obtain benefit even after 12 months. We know about capital expense now. We know about purchase, revenue, sale, drawings, and all the basic terms of the accounting. So I hope you must have understood some very basic accounting terms. And if yes, then please do like, share, comment, and subscribe to our channel. In case of any doubts regarding this chapter, you might write down in the comment section below. Thank you.